Welcome to a new episode of Crypto Risk Office Spotlight, the series that puts under a magnifying glass hot topics, companies, and stories from the crypto ecosystem relevant from a risk management perspective for the Crypto Risk Office community. Today, I'm very excited because we talk about something new for the Crypto Risk Office. We haven't covered this topic yet, but we are digging into the world of DeFi insurance with Edward Ryall, co-founder of Neptune Mutual, the largest DeFi insurance protocol on Arbitrum. So welcome, Edward. I'm so happy to have you here with us today. How are you?
Thank you. I'm very well. Thank you for having me, Alicia.
No, thank you for being here with us and talk more about DeFi insurance. I'm looking forward to dig into it. And so let's start. And my first question for you, Edward, today is: can you please give us an overview of Neptune Mutual, which is the largest DeFi insurance protocol on Arbitrum?
Yeah, so Neptune Mutual is in the DeFi insurance category of protocols. And we have a marketplace where users can come and purchase cover to protect their digital assets. So we can jump in the course of time into what it is that makes us different. But that is what we do. We protect users from different sorts of incidents, so hacks or custody risk.
Yeah, which is amazing. We of course love to hear about risk mitigation strategy, and this is very much one of it. So as a co-founder, what motivated you to establish Neptune Mutual?
Well, firstly, I am a co-founder, and the two others, so Binod Navan, who's the CEO, is a security and blockchain expert, and Gillian Wu, the third co-founder. So she is well known in the blockchain industry, having set up Hobie Asset Management in Hong Kong as a CEO, and she also runs a venture capital company, Milana Capital. So together, we're the three co-founders of Neptune Mutual. And all of us, for different reasons, recognized, firstly, that the digital asset space is a risky one and really needed not only measures to make it safer, but also to mitigate the risk in the event that something bad happened. And as we saw last year, lots of bad things do happen, and digital assets are not only risky from the financial and economic point of view in terms of their volatility, but most particularly they are at risk of hacks. And last year, one in every $25 worth of digital asset was stolen. So the market was a little under $50 billion in total, and $2 billion were stolen. So there is a huge need to protect digital assets.
Yeah, absolutely. It's mind-blowing to think about all these hacks and exploits happening. And like when I talk to non-crypto people, the first concern for them, oh, the market is so volatile. Yes, I said yes. But actually, exploits and hacks are also a major problem for the industry. So who exactly should be considering interacting with the Neptune Mutual ecosystem, and who are the ideal candidates to benefit from purchasing insurance through your platform?
So really, anyone who owns digital assets should think very, very carefully and ideally protect them with some kind of measure to mitigate the risk of loss. As we've said, the problem is, and the risk is very high, and most people are familiar with the concept of mitigating risk for their traditional assets, whether that's a house or a car, and in many cases that is a requirement of law. So you don't actually have to choose or think about whether you should or shouldn't do it. You have to do it in many cases. In the digital asset space, you do have the option. And it does require people to take the initiative to go and take out cover protection. But it was, as we've said, and as most people know, the digital asset space is a risky one. and it's quite possible to have great trading strategies and make great returns. There are lots of different opportunities for high leverage and to generate high returns. But at the end of the day, if those digital assets are not mitigated against some of the biggest risks in the space, then they're at danger of being lost. And so that's really why Einard and Gillian and myself came together, which is to create a solution to help protect people and their digital assets.
Yeah, and that's great. So let's dig more into it and like the dynamics, mechanics, how it works. I'll ask you, how can blockchain projects, for instance, get started with Neptune Mutual to provide coverage to their communities?
So yeah, that's a great question. And I think it's really important that projects, DeFi and CeFi, take very seriously the protection of their communities. And they can do so by getting in touch with us and spinning up their own cover pools in our marketplace. So as a marketplace, we offer the infrastructure, if you like, for projects to create their own cover pools in which they create their own cover policies with the right parameters and terms to protect their own community. They can seed the liquidity of these cover pools and then market those cover pools to their community. So whilst we are in the DeFi space, we decided that the creation of cover pools wouldn't be permissionless. That's to say, it is when I say by invitation only, what we're saying is that we select projects very carefully so that our community can be sure that we have looked at the security of the projects before they are allowed onto our marketplace platform. So we do work with projects, we check their security, and we help them create their cover pools and market this protection to their community.
Let's come to this very interesting question. When sometimes insurance processes can sometimes be a hassle with lengthy claim settlement and complicated procedures. How does Neptune Mutual, in this case, simplify the insurance experience for its customers?
So again, a great question, and there's a number of different answers because there's a number of different ways in which we have tried to make the process both simple and scalable. So if I touch on just a few of those, I guess the first one is to design a clear and simple user interface. So in our marketplace, users can access the marketplace on 3 different networks. So the Ethereum network, Arbitrum Layer 2, and as of last week, the BNB Smart Chain. Connect your wallet, scroll down, have a look through the different cover products. You choose a cover product, and then you choose the amount of cover that you would like protection for. And you'll have a quotation to give you an indication as to how much that's going to cost you based on whether you select 1, 2, or 3 months worth of cover. You complete the transaction, and then you're protected. So in terms of simplifying the process, UI is one of the answers to your question. The other answer to your question is once you've purchased a cover from Neptune Mutual, how does that work in the event of an incident? And the solution that we've come up with is called parametric cover. So it's something that has existed for many, many years in the traditional insurance space, but generally relating to environmental risks like earthquake risk. And the reason that we believe that it is relevant and good and makes things simpler for the blockchain space is because with parametric cover, the parameters relate to the incident itself. And therefore, what needs to be evaluated is simply the incident or the hack itself. We do not require individuals to submit individual loss claims. And that can be very significant because if a hack arises and many, many people are impacted, then all of a sudden, at the same time, that could generate thousands or hundreds of thousands of requests for claims based on individuals' loss. In our particular marketplace, that doesn't happen because we just assess, or the community rather assesses the incident, and if it is deemed to have triggered the parameters of the policy, then everyone with that policy will get paid out. And obviously, if the community decides that the incident didn't trigger the parameters, then nobody gets paid out. So it's very fair, and it's also fast because it takes 7 days for the mechanism that we put in place to run its course. Then there's a 24-hour cooldown period. So within 8 days of an incident, the community, or the community of cover purchasers, can get paid out. And of course, for blockchain projects, that is really, really important, because brand is very important, brand resilience. And if an incident happens, what does a project want to achieve? It wants to regain the confidence that the community may have lost in its project as a result of the hack. And through parametric cover, we can get the money out to those who have bought a cover policy, within 8 days, or following 8 days, I should say, of an instance. So that is really, really important for projects to be able to offer that to their community, and to make their brand more resilient to some of the hacks and incidents that we have, seen, unfortunately, too often in the space.
Yeah, no, absolutely, is definitely brilliant, and I'm sure we need to raise more awareness around this kind of products, because it can make the difference. So let's talk about what specific risks does Neptune Mutual's parametric insurance cover, and are there any limitation or exclusions that potential customers should keep in mind?
So, as I said, the cover pools are created by cover creators. Generally speaking, they are projects. And so it's the projects themselves that create the parameters of the policy that they offer to their community. Those parameters do include exclusions. So when when purchasing a cover, you actually need to look quite carefully through what the terms and conditions are, what the exclusions are, and so on of each policy that you wish to purchase. So generally speaking, that the marketplace covers 2 types of risk for the time being. The first is smart contract risk, and the second is custody risk. So for centralized exchanges, you can purchase custody risk. So that's to say, for OKX exchange, OKX users can purchase a cover policy that will pay out in the event that OKX freezes withdrawals from their centralized exchange for a period of more than, I forget whether it's 14 or 15 days, but it's detailed in the policy. And if for whatever reason there's a run on the liquidity and they have to freeze withdrawals, then those who have this bought this cover policy will be protected and will receive a payout. So custody risk and smart contract risk.
Yeah, very, very, very interesting. And so I think let's dig a bit more into what is the financial stability that Neptune Mutual ensure, and the financial stability and security of its insurance pool. Are there any mechanisms in place to prevent fraud or mitigate potential risks?
Yeah, again, so there's a variety of, I suppose, a number of different answers to the question. Firstly, Neptune Mutual, as with any other project, is exposed to security risks. And I must say, having a CEO who is a blockchain security expert is enormously beneficial. And it's not just a question of smart contract risk, because there are all sorts of different attack vectors. Smart contracts are one. Many users will have heard of social engineering. There's front-end risk. So we have to be, and are, extremely careful and pay particular attention to making sure that we do whatever we can to minimize security risks.
Yeah.
We talked a little bit about smart contract risk and audits and the marketplace. And Neptune Mutual has obviously been through smart contract audits, like all responsible and mature companies. So ours were audited by Open Zeppelin and BlockSec as well.
Okay.
And in terms of managing financial risks, one of the things that we try to design into our marketplace is a certain amount of stability, or at least transparency, for liquidity providers, because we all know that the capacity in the DeFi insurance space needs to grow. What does that mean? That means that more underwriting capital is required so that more cover policies can be written. And so to attract in underwriting capital into the DeFi insurance space, it is important that there is transparency, and we believe to a certain degree independence from the crypto market volatility. And one way we've achieved that is by creating cover pools in stablecoin. So cover purchasers purchase their policies in stablecoin, and the payouts that they receive in the event of an incident are in stablecoin. And liquidity providers benefit from providing underwriting capital by receiving returns in stablecoin, which are essentially the fees paid by cover purchasers. So the fact that the cover pools are in stablecoin does provide a lot of stability to our marketplace, which is completely independent from our own token in terms of price volatility.
Yeah, no, it really flows. And with everything that has happened in the industry in the past few years, can you share a practical example or real use case where Neptune Mutual's parametric insurance could have been valuable in mitigating such risks or managing losses?
So sure, and really, when you look at all the different DeFi projects that have been hacked, then if any of those projects had created cover pools in our marketplace, then anyone who had purchased a cover would have received a payout in those circumstances. We have actually, if listeners go to the Neptune Mutual website and scroll down to the bottom, you'll find we have a hack of all the most recent a database of all the most recent hacks in the DeFi space, which is useful to have a look through. But again, we're kind of broader than that in the sense that we also have centralized exchanges that create cover pools in our marketplace. And it kind of makes sense in a way for CeFi as well as DeFi to use this approach, because as we've unfortunately seen in the past, there isn't much credibility that CeFi projects can gain from having investor protection funds, because investor protection funds are subject to the same losses as other liquidity in those projects because they're held in-house, so to speak. Those funds are susceptible to being used or misused, or being there or not there. And it is much more credible for CeFi projects to have those funds custodied in a smart contract in a decentralized way, and for the application and use of those protection funds also to be at arm's length. And that's what our marketplace provides to CeFi platforms. So we have got quite a lot of traction from both the CeFi and the DeFi world to provide a much needed mitigation for custody and smart contract risk.
Yeah, and how do you manage to adapt to changes in the market? Because we know that the cryptocurrency and blockchain industry is constantly evolving. Everything changes so fast. So how do you manage to adapt to changes?
So again, I suppose there are things that change. Certainly, there's a lot of innovation going on in the space, and we also are innovating and busy updating and creating new features, functionality. We're looking at AI and how that can be applied to our marketplace in different ways. There are also things that don't change, or at least haven't been changing very recently, and those include the risks that our marketplace is there to mitigate.
They're always
so
there.
some things change. Exactly. Some things change, some things don't. One thing that is very, very clear is that there isn't sufficient mitigating measures in place, or the adoption, I should say, isn't nearly enough, as big as it needs to be for users really to be protected. $2 billion worth of assets lost last year, and the total DeFi insurance TVL is only 300 million. And so there's a huge growth potential. And one of the things that we're doing to try and tap into growth is really to focus our rewards on cover purchasers and liquidity providers. So we have two different mechanisms and two new loyalty programs that we are launching, one of which is launching this Friday, which is really exciting, which is the NFT portal in our marketplace. And that's an NFT loyalty rewards program, which will be primarily focused on cover purchasers. Just at the moment, it will also reward liquidity providers for a short amount of time. But that's a really exciting project, which we're launching this Friday. And the second innovative, a second innovation we're launching is a separate reward mechanism for liquidity providers based on NPM, so our project native tokens, which will be allocated to qualifying cover pools in our marketplace. So liquidity providers will be able to get not only stablecoin returns, but also NPM emissions. And we have produced some YouTube videos. We had a Cointelegraph article about the Vote Escrow NPM, which will be launching fairly soon, which will really boost liquidity provider returns. And I think it is really important. Important that we reward those that use our ecosystem and on our marketplace. So we're ramping up the returns and the rewards that our users can get, and hopefully that will grow adoption to make the blockchain space a bit safer.
That's amazing. Really glad to hear all about it, really. And let's say that every time we try to set up something new, a lot of good comes with it, but sometimes also some challenges. So I want to ask you if you encounter any specific challenges while developing the parametric insurance for protocol for Ethereum.
So we thought and designed the system very carefully with growth in mind. And we're happy, if you like, with the design choices that we've made. What is challenging, very challenging, is communicating and getting visibility in a crowded space where everyone wants attention. So that's difficult. And I would say probably particularly difficult for ourselves and others in the DeFi insurance space, because DeFi insurance as a subject isn't necessarily as easy to market as like Web3 gaming or some of the other exciting and risky, in many cases, projects that are out there which offer super high returns based on very high leverage. And all of those projects have their place, and they're exciting and they're great, and we work with many of them. But our narrative around mitigating and taking the steps necessary to mitigate incidents requires a lot of effort on our part. So, and that's one of the things that our NFTs are designed to do. So to sort of share our messages in interesting and fun ways. But definitely getting time, media space and visibility, it's a challenge for everyone, and I think particularly so for ourselves. But we're working on it. We're trying hard, and we are, I think, making big improvements. We certainly have focused a lot on it now that we've got the NFT portal. We've launched on Arbitrum. We have lots of projects upcoming, like the Vote Escrow NPM and the liquidity gauge pools. So we do have a lot to talk about, a lot of messages to get out, and we're really ramping up our marketing activities so that we can hopefully grow DeFi adoption, or rather DeFi insurance adoption, which we believe is really, really important.
Yeah, but no, well done for making insurance, turning insurance into a very interesting and also exciting product. I mean, I'm sure many people would be really happy to collect your NFTs and make it a bit more fun. Well done to the marketing team.
Thank you. Well, yeah, I have a great team in the marketing team supporting all our efforts. The design team have done an amazing job with the NFTs, and the tech team have rolled out one new initiative after another. As I said, we launched on BNB Smart Chain just over a week ago. We're launching our NFT marketplace this Friday, so we have a very committed and busy team. So yeah, many thanks to them.
Well, that's great to hear. So let's look at the future. What enhancement or expansions do you envision for Neptune Mutual in the world of what's considered digital assets and collectibles in Web3 and blockchain tech? Also, are there any plans to extend the protocol beyond Ethereum and Arbitrum to other blockchain platforms?
So yeah, so starting with the last part of the question, yeah, we're now on 3 chains, as I mentioned, and we are looking at other chains as well. So there are new L2s that we're speaking to that are coming out, and it does make sense to drive growth by increasing the accessibility, both on different chains, but some projects are on some chains and they're not on others. And whilst it's true that because our cover is based on stablecoin, it is quite possible to buy, for example, stablecoin cover on one chain that is effectively protecting and mitigating assets somewhere else in the ecosystem. But nonetheless, we recognize that people have preferences in terms of the chains and networks that they use, and the wallets that they have, and therefore we need to recognize that. And so I think being multi-chain is important. We are making steps in our UI to make that as simple as possible. So we have a bridge integrated into our own UI, so that our community can bridge NPM tokens from one chain to another. So I guess that's one part of the answer. Yeah, working with new projects is another part of the answer. So onboarding new projects is something that we're doing. And not only working with new projects, but working with projects in new ways and embedding cover within the dApps of other projects is certainly something that is something that we're working on. We have an SDK, and if projects are interested in providing cover protection to their community from within their own applications, that's something for which we already have code that can be deployed. Our tech team can work with projects and get that done. So embedding DeFi cover within other projects is something that we're pretty excited about, both in terms of making cover accessible, but also in terms of providing liquidity. So that is also something that we can do. So integrating a liquidity feedback loop into a cover project's cover pool.
Yeah, it sounds really exciting, and I'm looking forward to hear more about all these news and in the future. So I'm sure we'll have an update at some point.
Yeah, the DeFi insurance space is one that really has a logic and justification for growth, and so any DeFi natives that are looking for a space where there should be huge opportunities for growth, I think DeFi insurance is definitely worth taking a look at. It's far too small in relation to the size of the risks that are out there. So I think it's a pretty exciting space to be in, and its growth is in fact not only driven by the fact that it's undersized at the moment, but for new sectors or for existing sectors that grow rapidly in the future, they are connected to the DeFi insurance space, because anywhere that DeFi assets grow, DeFi insurance, logically should grow with it to protect those assets. So it's a really exciting space.
It is indeed. So my last question for today is then at this point, yes, how do we get started with Neptune Mutual?
So I think probably the best way is to join our social media channels. So we're present on most of them, Twitter, YouTube. We're spending more and more time creating good quality content on YouTube, both in terms of tutorials, and we will progressively be doing more and more discussions where we invite experts on to talk about security, DeFi insurance, stablecoins, and other topics that are of interest. We have a Discord channel which is very active for those who are using our marketplace and have specific questions. We have great moderators who are available almost 24 hours a day. But if you don't get a response, then it won't be very long before they get back to you. Yeah. So all of those three channels, you can definitely follow us, obviously Telegram as well. There is quite a lot to know, I would say, about DeFi cover, what's different about parametric cover to discretionary insurance. So all of those questions we have provided content to both in the social media channels, also on the blog of our website. There's a lot of material. So our role now is really to educate, communicate, and do as much as we can to help people understand the space. So yeah, follow our socials.
Amazing. And we leave also the Discord channel link to access in the comments in the post. So yeah, just look below if you want to get the link. Well, Edward, what to say? Thank you very much for today. I think it was a very, very interesting chat, and I'm looking forward to hear more about your new projects. It sounds all very exciting and something that we definitely need in this current market.
Well, thank you very much, Alessia, for having me. Crypto risk is part and parcel of the space, and risk is here and it's going to stay. So I just hope that people will protect themselves against those risks. Have a look. By all means, connect with us. Happy to answer any questions, and exciting times ahead. So look forward to chatting to you again soon and sharing more updates and news.
Same here, and thank you very much to all the people that listened to us today. Please feel free to leave comments or send us inbox, and we'll definitely get back to you. Thank you again, and chat to you soon. Bye. Bye, Edward.
Bye.